students, welcome back to the session on commercial banks. In previous session we have discussed what are the objectives of commercial banks. In this session we'll be discussing on the various activities or the functions of commercial bankings. So let's see in detail. So it has divided into two different functions, primary and secondary functions. So let's today in this session we'll discuss about the primary functions of commercial banks. So the primary function of commercial bank is accepting deposits. So as it is main function or a primary function of commercial bank, it promotes in terms of the conversion of saving into an deposits by public. It accepts the savings or it accepts the money from general public by paying the interest against the deposits. So it accepts the deposits in the current deposit accounts. So this is the account which doesn't have any minimum required balance to be maintained. The transaction here is not restricted, or it is so any does not customer or any depositor cannot it is not mandatory to maintain a certain balance with respect to the deposit. So generally these accounts are preferred by a business individuals or any business enterprises considering their financial transactions. Moving ahead, we have a savings bank account. So this is the account generally any individuals can opt. This is, as name refers, the account type is for the purpose of savings. Here the deposits are accepted against the interest rates being paid on the amount accepted by depositors. Here, as a savings account, there is a certain limit is mandated by bank to be maintained as a minimum balance in order to function or in order to use the account or to save the money. Here there is no limit in terms of transactions. We can deposit a number of times and we can withdraw the n number of times in terms of the savings accounts. So next is fixed deposit accounts. As the name refers, the deposits is accepted based on certain fixed duration. It is mentioning it is 3 months or 6 months or 1 year. So depending upon the duration, the amount is fixed with the bank, where customers or depositors are not allowed to withdraw the amount. So this deposits would have more interest rate than any other deposit accounts. Okay, so these deposits are accepted for certain fixed period, no matter it is what is the duration. So it depends on the customer on and their interest to be blocked this savings as fixed deposits with any commercial banks. So moving ahead, we have recurring deposits. So it is same as a fixed deposits, where bank accepts deposits from the customers in order to deposit for a fixed duration. But here the interest paid or the recurring deposits accounts is open in order to earn monthly as you know, this acts as a monthly income, because here the interest rates would be deposited to the customer's account on monthly basis. So it acts as a recurring deposits for any customers or any depositors, where they fix the amount for a particular fixed duration. Say example, if 10 lakh is being invested as a fixed deposit, but customer would accept or would prefer to have an interest being paid on the 10 lakhs on monthly basis. So this is how it happens, or it acts in recurring deposits. Moving ahead, so another primary function is lending money. So under lending money, what are the programs is being provided, or what are the facilities is, or what are the functions being provided by commercial banks? Let's see one by one. So we have overdraft facilities. Generally, this will be provided based on the current deposits and the financial transactions of an individual, where The bank is fixed certain amount in order to withdraw even the account is having zero balance. Okay. It's a provision provided. Overdraft is a OD is a provision provided to any current account holder in order to withdraw the excess amount, even though having the zero balance with current deposit account. Okay. Moving ahead is cash credit account. It is almost similar to the overdraft. So cash credit is the credit facility where it's provided. The credit facility is provided to an customer having a separate account open for a short term duration, not for longer duration, not more than 5 to 6 months. Within that specified period, the lender has to repay the loan amount. So that is referred as cash credits. It is with the the loan, the cash credits will be lended against the security in term or say mortgaging the properties of borrower. Sorry. Okay. So again, next is loans and advances. Loans and advances are the loans being lended to the customers. Advances are the advance payments being done on loan projects to the customers. Okay. Moving ahead, we have interesting is discounting bills on exchange. So generally, this facility from the commercial bank is provided to the manufacturer of goods or any business enterprises. Okay, say I would try to explain discounting bills on an exchange of goods. So this is we have person A and person B, where person A is a supplier, person B is a purchaser, wherein person B wants to purchase certain amount of goods from person A, but where he's short of money, where he doesn't have money, he wants to purchase it on credit basis, but so both person A and person B come to an agreement to purchase the goods on credit basis for certain duration, say example for 3 months. So somewhere in between, supplier Mr. A is in short of money and he want that money, where the person B, the purchaser, has agreed to pay it after 3 months. So he can take that agreement to the bank in order to discount the bills and get the money based on the agreement being done by purchaser and supplier. So later on, when supplier goes to bank accepts the agreement of purchase, so the credit agreement accepts and discounts the amount to be paid. Say example, Mr. B was supposed to pay some 10,000 rupees to Mr. A. He discounts certain commission charges. He deduct the commission charges, say example some 5%, so it would be some 500 rupees or somewhere. So that would be deducted as the commission charges, and the 9,500 would be paid to Mr. A. Later on, after 3 months, which is the maturity of the agreement, later at the date of maturity, bank would approach Mr. B, who is a purchaser who has purchased goods on credit basis. He would collect the money he would recover the money from purchaser, which is Mr. B. So this is how it works, where the agreements based on the credit purchases would be exchanged to the bank or with the bank in order to avail the credit facilities. So this was all about with the primary functions of commercial banks.